All right, so some news coming in on Bitcoin ETFs today with BlackRock going to a zero. We'll talk about that. And we'll also get into some ideas as to where the market might be trending with the current situation, all playing into this today. My name is Paul Barrow. Welcome back into Tech Path. Let's get started. I want to start with our sponsor, and that is Tangem. Self-custody wallets are one of the best ways for you guys to do your own self-custody. And of course, Tangem is one that I like. And of course, all you have to do is visit their website, Tangem. One thing I like about Tangem is, again, their security is, I would say, bar none. It is one of the best out there. And then you also look at just ease of use. This is one of the things when I've, helped people set up their wallets, friends of mine, this is one of the things that they draw attention to is this is really easy to use. And for them, I'm not saying that it's bad, but it's one of the ways that people kind of enter the market. So check it out. Use our code down below. It will help you guys get into it. All right, so I want to go over to this first story, and this, of course, is BlackRock's Bitcoin ETF Inflows Halt after 71 days. That's a little bit of an abrasive title there. Basically, it boils down to they broke down off of a 71-day streak of inflows being positive to a zero, which I'll break down here in comparison to some of the others that were performing out there. But the spot Bitcoin ETF had tallied net inflows on everyday trading since launching on January 11th. The 71-day streak ended. According, this is Farside, which is one of the trackers. They saw zero net inflows on Wednesday, shattering an unprecedented record for a newly launched ETF. And remember, we've shown this before, and that is that this is one of the best performing ETFs in the history of Wall Street. So the fact that it has pulled back some, I would think at some point you're going to expect that, especially in the sideways chops of what we're dealing with in the market itself. So you can kind of see some of the breakdowns there of what's happening. There's IBIT coming in at 71 days. Man, that was crazy. They made the top 10 list of the best ETFs in history. So pretty cool. Further into this kind of shows you some of the characters that were at play here. The only ones that really had some positive numbers were Fidelity and then ARK. Let me kind of zoom in on that because the 24th was the day in question, right there at 5.6 versus 4.2 on ARK. Those were the ones. Pretty much everybody else was kind of at a flat rate, and of course, BlackRock holding at a flat rate. And if you look at some of the charts on this, I thought this was kind of interesting just to see the spot cumulative inflows or flows in general, and a little bit of flat side right here coming in, and then of course you see what's happening right there with Grayscale, which is in the gray, continuing to move forward down. Had they just adjusted their rates sooner, this right here is them coming back from a better rate position. I just wonder where Grayscale would be today. I don't know. That's an interesting one. All right, listen, guys, by the way, if you haven't not liked this video already, start it off. Let's get going. Hit the like button. We're going to break this down for you, give you guys some insights on a lot of this that I think are going to be important to where the markets are going to be coming. Also, we've got a poll going out there. I want to get your opinion on the Hong Kong ETF and ETFs, I should say. And make sure to drop some comments over there. We'll try to get to some of those.
There is some breaking news.
Breaking news. Oh, we have breaking news. Let's go with it.
MetaMask is suing the SEC to defend
Okay. All right. Yeah, we'll get that. So some news coming out right now on MetaMask suing the SEC. I'll pull the article for you guys as we get going into the show. A couple of things I do want to hit on real quick is this story right here. U.S. indices slide a little bit with GDP data pointing a little bit of a worrying picture. And when you look at just what happened yesterday with Meta, even though there was a little bit, I think, of I won't say manipulation, but just whales doing whale things. But you look at GDP in general, this is something that is a little bit concerning, and I don't think this is a look that Chair Powell is going to be looking forward to, and that is increasing, GDP increasing an annual rate of 1.6, okay, but falling short of the projected 2.2, so not growing quite as much as we should be. This is not surprising under the current economic conditions. Business investments, particularly in equipment and intellectual property, showed modest growth, was not enough to offset the negative impacts. This, I think, is still early for a lot of these AI plays for this to become more of a productivity landslide. So that, I think, is going to take quite a bit of time before we start to see some impact on the markets. Economists also have expressed concern about the sustainability of economic growth, given the current high interest rates and ongoing global economic uncertainties. This is the problem right now that we're dealing with, is this uncertainty, not only from a global perspective, but also just how this political situation, the landscape with the election is going to play out, but also what is going to happen through the summer in terms of inflation. And I'll show you some interesting things there on that. I want to go over to Kobisi letter. For those who do not understand what just happened, this is first Q1 2024 GDP slowed down, as I mentioned earlier, half of the 3.4 of Q4. So that's a big difference between just what we did, 1 quarter ago. This reading is roughly 50% Goldman Sachs expectations. This is interesting because I am seeing more and more of the best analysts out there getting it wrong time in, time out. And I'm going to show you some things on inflation that is proving that even more so. So I look at this and I think, guys, the way to pull this is to look at the markets from a holistic position. Look at risk assets, risk off assets, look at where the markets are going from, the macro scenarios, and then understand the sentiment component that plays into this. I want to go to a clip because this is one of the JP Morgan asset managers that is now trying to predict this going forward. Listen into this one.
It's going to sound weird. We're still high for longer, not higher for longer. So you're just saying that we may not get the cuts as soon as or as many cuts, but no hikes in your view.
That's right. And I think 2 letters make all the difference. And that was really
the ER and
the ER. And that
higher.
that was really the Fed pivot in December. It was just that. It was saying, look, July really was the last rate hike. We see risk as more balanced. We see the diffusion of inflation has really come down. Inflation expectations are anchored. That's enough now. And the next move, it's inclined to be a cut. It's not tomorrow. But that's the next move. And that makes a difference. It gives gives companies, gives consumers, gives investors much more visibility about the cost of capital, and as a result, unleash quite a powerful rally there for 5 months. We had gone 279 days without a 2% pullback. It's much more, shall we say, normal to have 5% corrections 3 times during the year, 10% intra-year as well. So far, just normal behavior, shall we say. In terms of, is it over? Is it going to get worse? I think what's macro-driven, and that's affecting more of your cyclical area of the market, I do think that calms down if we do get that 2 handle on GDP and PCE. But then there's a separate issue going on, which is much more micro and focused on earnings and the very high bar that was set there for some companies. And I don't think we're out of the woods quite yet, as the earnings last night showed.
All right, so I don't know if I would believe what is coming out of JP Morgan right now or many of these. I mean, we've seen Citibank, scenarios that have played out wrong. We've seen JP Morgan, we've seen B of A, pretty much all of the analysts coming forward have missed what's happened here in the last 4 months. Now, maybe they're going to start getting it right in the summer, and maybe there's been a cumulative data that's been collected to help kind of align with that. One thing that I think we have to kind of consider is the rest of these narratives going forward. This is Bob Dole, which is with Crossmark Global Investing. He's going maybe a different route. So here's the flip side of what they're thinking. Listen in.
As you all discussed, economic data is pretty good. In that environment, it's unlikely we see the eyes of a recession anytime soon, and therefore a plain old bear market. So we're way overbought, maybe not in the short term, but we've had that almost 30% rise from the Fed pivot announcement on Halloween until the recent high. It's time for just a little rest. Markets get tired, just like you and me.
When you say overbought, and I'm tired too, are you talking about the index level on the S&P, a specific cohort of names, the big tech players? What are you talking about specifically?
Yes, all of the above. I mean, the breadth of participation certainly improved. It's not what a lot of technicians would like to see. And as you're pointing out in the earlier conversation, for these high-flying, big attention names, if the numbers don't come through and the verbiage is imperfect, you spill back. Take Meta. Down, yes, but look at it over the last 6 months, 12 months. It's still been a monster stock.
All right, so yes, that it has been a monster stock. We've seen this in a lot of the securities. He gets into it a little further because remember, the tech stocks in most cases, I think a lot of people have looked at this as being the driving force. around what we've seen in the crypto markets, especially with the top tier cryptos. Doesn't necessarily affect the meme coins and some of the altcoins as much, even though we will see some bleeds from those. But I want to look at this clip right here where he gives a different story around very specific stocks that could play into the narrative for crypto. Listen in.
Mike Wilson was on the show of Morgan Stanley a couple of days ago, and he was talking about how difficult it is to call any kind of index level because this has been a story of specific stocks, and we see that in the earnings. The bar is different, the types of guidance is different, the response is different. How has that changed the way you approach investing?
Much more stock specific. Take the Magnificent Seven. Last year, they all went up. And we get to the first quarter this year, and you get Apple and Tesla down a double-digit percentage and some up a double-digit percentage. It's not a stock market, it's a market of stocks, as we often say. But that's even more true now.
Yeah, so, and we've seen this with a handful of these. I'm still concerned with the AI side because if NVIDIA continues to push in this direction, could we see an overplay on AI, which has a lot of, some narratives that align with what's happening with crypto. So I still think it boils down, guys, to a couple of things that you have to watch, from a macro side of things. And that is still keep an eye on the inflation. I'll explain that in a second. And also just look at where the overall market sentiment is going, because people will start to shift away, especially if we see the stablecoin bill come out later this fall, which I anticipate. We're dropping a video on that, so make sure and watch that. But this is all pertaining into one of the biggest opportunities we as a country could take advantage of, and that is the innovation that is going to come in Web3 and all of blockchain. Speaking of that, this is the breaking news right here. Consensys sues SEC in bid to defend Ethereum. A couple of points within this. They argue that the SEC is unlawfully, let me kind of zoom in on that for you guys, extending its regulatory reach in an attempt of designating ETH as a security, threatening the operational freedom of ETH as an ecosystem. This approach, according to Consensys, would make it impossible for developers in the U.S. to build on Ethereum. Again, thwarting innovation in a big way, especially on the cusp of what's happening in Hong Kong. And if Hong Kong is successful with the ETF launch both on Ethereum and Bitcoin, could we see other countries start to roll in behind them? This could get out of control quickly for the United States. Ethereum is a world-changing tech. ETH itself potential to be a significant driver of the U.S. economy if they would just embrace it. Now, granted, the stablecoin bill could change a lot of that, especially with its alliance toward USDC, obviously driving as an ERC20 Ethereum token. So there are some benefits to this kind of going forward. I want to kind of continue on the inflation side of things, because this goes back to the key points that you really need to pay attention to of this current market, which is really going to be playing out in the summer. This is the mapped inflation projections by country for 2024. Most of these have been wrong, including the United States at 2.6. I'll show you the chart here in a second. And then you look at Canada at 2.1, even China, which has been one of the lowest inflation numbers. These numbers were almost entirely all wrong from some of the biggest analysts out there in the markets. Every market globally, from the EU to the US to Asia, all of these economic centers missing the mark. And when you look back at this article, this one, of course, was back in April, just around the corner, April 1st, okay? Why we expect inflation to fall in 2024. So this is another one that is putting more of a pinch on inflation continuing to reel back. That is the question mark going forward. You look at the history right here. This is the 5-year. And I want to jump over to the 1 year, actually, because this shows something that I think is a little worrisome. And that, of course, is, yes, we had the big downturn. July we thought it had been licked last year. And guess what? We started to pull back, started to dip in, and now we're back on this upward track right now with 2 positive prints on this. And if you go to the 3-year, this is the thing that you don't like, is this kind of recurrence, because this can start to indicate these kind of pushes that we saw in September of 2021. Again, if we don't get it under control, this is obviously going to have a big push on Powell. So what does that mean? It means that we could see either no rate cuts or possibly even a rate increase still. And I know everybody's been pulling for the rate cuts, but it's very possible we could see a rate increase. So that playing, if all of those things come into play, the situation may be a different outcome for this bull run. And that's the thing we're watching very closely. It is getting to become a big tightrope going forward. Franklin Templeton has enabled peer-to-peer transfers for its on-chain U.S. government money fund. And within this, just from Franklin Templeton's standpoint, because again, this gets back into more of the traditional finance coming into our work zone. 32% of the market share represents around 384 million in assets. They're going to launch their Benji token, even though there's a Benji out there, but they're going to take that token. Well, ability to transfer shares amongst each others. Eventually, we'll hope that the assets are built on blockchain rails such as the on-chain U.S. government money fund to work seamlessly with the rest of the digital asset ecosystem. Remember that this is very similar to what BlackRock has done with BITL and, of course, Securitize, which, by the way, we dropped a video on that with the CEO of Securitize. Go back and listen to that because it's a good interview that I think gives you a bigger picture of what real-world assets and tokenization are going to represent. A couple other points they had on was, of course, BITL, which has grown to capture 25% of the market just a month after its launch, also managing over 304 million in assets. So this is a big deal because this is starting to eat into Franklin Templeton. Here's an example of these things. Look at this. There's BITL right there in that gold. Let me kind of zoom in on that for you guys to see. But right there, good example of how we've seen this massive surge in real-world assets starting to move in on tokenized treasuries. So all this is pointing in the right direction, but again, we're still in a market that has such an element of flux going forward. The U.S. denies the spot ETH ETF next month. This is most likely going to be the case. I know we have a poll up there whether you guys think the ETH ETFs are going to perform well in Hong Kong. And I guess that's the real question, because if this does pull off the mark and we see Ethereum do well in Hong Kong, this could set the tone for a lot of things that could start a domino effect around the world on crypto, especially within the ETH ecosystem. I know you guys put in some questions. We'll try to get to some of those. Make sure and drop in as many as you can over there. We'll try to reference a few of those. And then SEC reviews new rules for Bitcoin options trading. This just goes back in this whole issue with the overreach problem of the SEC. Remember, it's like they're grasping at straws here, especially during times of stress. Part of the review process, exchanges' current surveillance and enforcement mechanisms are adequate to handle the unique aspects of Bitcoin options. So now they're coming in and taking a look at these kind of situations, similar to other investment options, trading carriers, risk that may not be suitable for all investors. This is typical of any kind of options scenario. So I don't know why the SEC is coming in and doing things of that nature. Crazy stuff. What else did we add? Oh, this was good news. And this is Stripe coming back into the crypto payments game. Now they're doing it with USDC. Hey, guess what? That's ETH. And most likely, what do they know? Likely is that they probably have getting quite a bit of influence from DC that's simply saying this is going to happen. We're going to get a regulatory framework for stablecoins. Don't worry, Circle's going to kind of take the reins here. But interesting stuff for sure. Transaction costs no longer comparable to Nolan Films for that's funny. Stripe is bringing back crypto payments, this time with stablecoins. Way better. I totally agree. Would you guys use stablecoins in Stripe? I'm assuming you would. If you're watching this channel, you probably 99% of you would do that. I would, for sure. I want to go over, we'll take a look at some charts as well before we get out of here, but I want to go over to our poll real quick. Let's take a look. All right, here we go. Which Hong Kong ETF will perform better in the Hong Kong market? 69% of you like the Bitcoin market over Ethereum. Interesting, because ETH has such a dominance in the Asian markets, the amount of projects that are, I don't know, this will be this is going to be interesting to watch for sure. So just around the corner is when this is going to happen. So we'll probably try to have some pretty cool interviews for you guys during that. I want to get over to some questions real quick, but I do want to take a look at the charts real quickly here on Bitcoin. So sliding after coming up, what was that range that we had held off of after we had hit that low? Nice 10% move and continue. If you look at this over time, this is of course using the Lux Algo signals and overlay indicator. Pushed us out right here at about this point at 65.7. but the miss was it rose to around 68, and then we started to see that dip. Kind of curious how you guys are playing this range-bound section. Do you think it's going to fall under 60? Is that the range that you're looking for, maybe as another dollar cost average if you're playing the Bitcoin route? But if you're looking at Ethereum, very similar. Right now, I will tell you this, that Ethereum has come in on our market sentiment data in continued, I think this is the third day in a row we've started to see negative sentiment on ETH. So do we see ETH slip below 3,000? Again, I anticipate we will, so definitely one to watch. All right, here we go. Brandon says, could a rate increase take Bitcoin down? Oh my God, yes, for sure, Brandon. Did we get a wipe in there? I swear to God, we got it. These guys, I swear, sometimes they're just messing with me. The studio here is crazy. All right. Fox Mulder, hey, there we go. There we go, man. They're in the house. What the hell is Stripe? You guys are having a good time today. I see it. Make H-bar. Make H-bar? Yeah. Oh, on an ETF. Okay. Sorry. Make H-bar. I'm missing some of the stuff on these comments. Geez. ETFs have zero inflows. Isn't unusual. Yeah. No such thing as overbought. I don't know. Maybe overbought on, maybe not crypto, but definitely on some of these securities. Overbought is definitely in the case. Asia will drive the bull run this time. U.S. again missing out on a lot of opportunity here. I think you're right, guys. This is one of the things I talk about with business leaders around the U.S. in all walks of life, both in tech, retail, different areas, and they all say the same thing when I bring up crypto, and they're concerned about regulation. They're scared. And if you have a business, community that's already looking at it that way, imagine if they were optimistic about this, like the internet, the growth of mobile, the growth of social. But now you have one of the best technologies out there to really move forward, and they're scared. So that is an issue right now. Thanks for the super chat, man. How can American buy ETF in Hong Kong? Well, there are ways. Well, I think you guys will figure that out. But there are ways. Corey says, no doubt we will begin rolling this fall, just a time for election season. I think you're right. This Q3 and Q4 is going to be huge, so get ready. The other thing you need to be watching out for, and we're probably going to drop a couple of videos on this topic, is altcoins. Because we could see some pretty severe cutbacks on altcoins, and that's something that I am a little bit concerned on right now. Let's look at our most favorite, which is Solana, and just take a look. If you look at the pullback on Solana right here from let's go from its top right there. I mean, here we are at a nice healthy 30, almost 30%, 27% down. Is this a point where Solana continues its retracement down, or was this a little bit of a fake pump right here in this little zone that we're in right now? I still like that 130 entry. If I was going to do something there, that's probably where I'd be looking. Avalanche has a similarity right now that is around that $30 mark that I've been looking at. A couple of points right now. Again, Avalanche, very interesting. By the way, we're going to drop a video that I think will surprise you guys on something big with Avalanche. So I don't know if it's going to drop today. It may drop in the morning. Watch our channel. Make sure and smash the like button. That way you're going to get our videos in your algorithm, and you'll start finding us more and more. And guess what? You can share this video with someone else that's brand new to crypto, needs to learn, and they don't want to jump into the altcoin boys or the the pump and dumps. This is the channel for you. All right, if you guys are not in our Diamond Circle, get in right now. It's a great place to get additional content. And follow me on X, @PaulBaron. We'll catch you next time right here on TechPath.